My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. People, my friends, are just trying to make you some money. My job is not just to entertain, but it's also to educate and teach you. So call me at 1-800-743-CBC or tweet me at Jim Cramer. Who caused the slowdown? Was it the Fed in the kitchen with its boneheaded December rate hike, or was it the president in the library with his trade war with China? I'd love to tell you that this question doesn't matter for the stock market, especially on a kind of clueless day, where the Dow gained 38 points, S&P advanced 0.30%, NASDAQ climbed 0.42%. We care about the future, not the past. The fact that the Federal Reserve is now set to lower interest rates because of the slowdown is huge, though. We get enough hints in the Fed's turgid statement today that the next move for rates is down, and when the direction is down, what do? Well, you want to own stocks.
Bye.
Why? Because lower rates translate into a stronger economy.
All aboard!
Borrowing becomes cheaper, more money flows into the system via credit, and commerce picks up. At the same time, short-term treasuries become less attractive as investments compared to dividend-yielding stocks, so earnings are boosted, forecasts are raised, and high dividend-yielding stocks are more valuable. So welcome to the rate cut cycle. Here we go. I've been through this so many times that I have my own playbook for it, one that's worked for the last 40 years. When the Fed starts to ease, which is the situation we now find ourselves in, history says you should buy. Stocks like the retailers, the housing place, technology, the financials.
House of pleasure.
I think we could get a rate hike, a rate cut as soon as July. We're going to get a rate cut. I thought there'd be a rate hike in July just 4 months ago when the president was still really thinking things were, when the Fed chief was thinking things are so fabulous. Well, no, we're going to get a cut, and that's just plain bullish. Under normal circumstances, I say it's enough to prolong the rally until we learn what's next on trade. Unfortunately, this is not a normal time. That's why when Jay Powell droned on about how the Fed is above the political fray, well, I couldn't help but think that this man who declared today he would serve out his full 4-year term no matter what, in total defiance of the President of the United States, he is sitting on a huge powder keg. Let's review what happened, and then I'll tell you what comes next. First, at the beginning of his deliberately soporific press conference, a somnolent Powell talked about how we have a strong consumer economy with a plentiful job market. Hey, doesn't that sound fantastically bullish? You wouldn't usually expect the Fed to cut rates when that situation is occurring. In fact, if anything, you expect them to tighten the rates. According to Powell, the downside risks aren't coming from the consumer, they're coming from the business community. He explained that there's been a slowdown in business investment with weaker manufacturing, faltering consumption. In theory, if these negative trends continue, then employment will soon take a hit, and the weakness will start bleeding over to the consumer. That's what the Fed is closely monitoring. It's a phrase I told you wanted to hear today, because it means Powell is getting ready to give us the rate cut. All very natural. Why is business investment slowing? Okay, here we go. It's the rub of things. Powell did not directly come out and cite the president's tariffs on China, not in so many words. But he did say that trade news has colored the Fed's thinking, which again means the Fed is cognizant that the prosecution of the trade war may require lower interest rates in order for the economy not to be derailed. Powell kindly and respectfully, I should add, didn't link the tariffs with the slowdown. He made no pronouncements about whether the trade war is good or bad for the economy. He was a total gentleman to President Trump. Yet I think he's sitting on a powder keg because the president's no gentleman. The president wanted a rate cut. He probably wanted a huge rate cut. I think Trump probably doesn't want to admit that we need a rate cut because of the tariffs. That would undermine his whole shtick that tariffs are actually good for the economy. No. Trump will say that higher rates are what's hurting the economy. And Powell's a fool for not rolling back his horrendous, his miserable, his stupid, his chowder-headed December rate hike. That's why I expect the president to hammer Powell, demanding a rate cut right here, right now. Oh, it won't just be in Twitter. It'll be those things, he's walking out with the coat, going to the helicopter. It's just moments earlier. It'll be all that stuff, right? And guys yelling, hey, how about Powell? I don't like Powell. I think he wants Powell to give us a huge mea culpa. He'll tell us that the Fed is going to cause a recession unless Powell relents. Maybe Powell thought he could be apolitical. I mean, after all, the Fed's supposed to be apolitical. By not acknowledging point blank the slowdown is happening because businesses are worried that they'll get hit with more tariffs, it seems like he was trying to immunize himself from the wrath of the president. I think he's wrong. There is no escaping the wrath of this White House. I bet the president will start playing the blame game right now before he heads off to the G20 meeting. Classically, Powell's doing the right thing. He's weighing the evidence. He's being prudent. Nothing the matter with that. We get weaker employment, he'll act. We get slower consumer spending, he'll act. But what he won't do is cut because we're about to get a 10% tariff on another $300 billion of Chinese goods after Trump's meeting with President Xi fails next week, and I think it will. What does President Trump really want besides summoning Powell to the boardroom? The Oval Office and telling him that he's fired? By the way, that's something he doesn't actually have the authority to do. Could get in the way of that. Aside from humiliating Powell, what Trump really wants is simple. He wants all of his employees to toe the line. And he's under the mistaken impression that Powell's an employee who works for the president, kind of like the Attorney General works for him, to use a very awkward example. I mean, ideally, the Attorney General is supposed to work for the United States, right? But in practice, the president can hire him and fire him. He can't do that with the Fed chairman. It's an independent position. That's rankling the president. He doesn't seem to understand why. Trump wants Powell to say the following: we're cutting rates because we're going to be in a trade war with everyone, so we need to keep the dollar weak, just like Draghi. And that's something lower rates would accomplish. He wants Powell to say he understands the president's trying to make America great again. Or keep America great, right? We need a little change up there. So he wants to be a team player and be as accommodative as he needs to be, defeat the Chinese. Trump has the same attitude toward Powell that he has toward everyone else. He wants the guy to do his bidding. Powell didn't do that today. Too independent. That's why I expect the president will keep hectoring him and hectoring him and hector him because Trump desperately needs to raise tariffs all over the place and needs desperately to have lower rates in order not for the economy to fail before the election. Does it matter? Look, we just heard the mild-mannered Powell give you an avuncular analysis of why the Fed did nothing. I bet Trump will hit back and hit back hard because as he sees it, Powell's not a team player. That could lead to some disturbing headlines, horrible tweets, and cause some turbulence. I don't think it actually changes anyone's behavior. Powell will follow through with his plans. Trump will keep escalating the trade war. But here's the bottom line. This dynamic shows you why we can't be as bullish as we might like, even though today was such good news. We can't be because we didn't explode upward in the wake of this bullish statement and press conference because of the rancor between these two men. Normally, I'd be telling you to buy stocks left and right with the Fed about to cut interest rates, and I still think it makes sense to be bullish. However, with the president on the warpath, you need to be more cautious because even if the trade war is justified, the longer it goes on, as the fabulous Union Pacific CEO told us on this very show last night, and he's apolitical, the longer this goes on, the worse it is for our economy. Brandon in Texas. Brandon.
Hey, Jim, I'm a big fan of you.
Thank you.
I was wondering about the stock, Lockheed Martin Corporation.
I like Lockheed Martin. Good stock doing at this stage. I do think if the Democrats win next year, you're going to resent that you bought it right here. But the company's just spewing cash. It's doing a lot of things right. I think it's a good stock. Matt, New York. Matt.
Hey, Mr. Cramer. It's Matt in Limburg, New York.
How are you?
I recently bought – good, thank you. I recently bought shares of Party City right as it hit its 52-week low. Guidance said that they secured a new helium supply for the next 2 and 3 years, and institutional investors have been buying more stock. But yet, the past couple of days, it's been getting hit hard. Do I buy, sell, hold, or curl up in a ball and cry?
Was it Party City? Jeez. Curl up in a ball and cry. I mean, that's been a terrible stock. You made some money in it. You know what you got to do? This is not the kind of retailer I want to bank with. I got a lot of retailers. I mean, look, my Charitable Trust is sitting on this Kohl's, and I thought they were doing well. It is another 52-week low, and that's a well-run company, a good dividend. I say extended Party City now. How about Rick in Illinois, please? Rick.
Hey, Mr. Cramer, it's Windy City Rick. Thanks for taking my call.
I thought it was Windy City Rick. Didn't you think that, Regina? Okay, here we go.
Good to hear your voice.
Thank you.
I'd like to ask specifically about a dividend of a stock. I've been a longtime holder of a tobacco company, and I've seen a lot of growth in that stock in the time. I mainly own this stock because of the strong dividend. I'm not even a smoker, but I dig a dividend above 6%. So recently, Altria has made a heavy investment in the cannabis industry of Kronos. They've
Right.
also taken a 35% stake in Juul e-cigarettes.
Right.
And I also know that Altria is in a sector, the tobacco sector, that you may not recommend for that reason. But considering that, I want to know your opinion if you would consider the dividend of Altria to be safe or in jeopardy.
I think it's a very well-run company. Yes, I do not recommend tobacco companies. I'm not a smoker, a joker, or a midnight toker. However, Howard Willard is very good, and that yield is, that dividend, I believe, is safe. There's a lot of cash there. Again, I don't want to tell people, if I tell people to go buy the stock, I should tell people I think to go buy spit cigarettes. I don't want that. But that dividend, if you're asking about that, it's fine. All right, buckle up, Cramer. The rates-cutting cycle is soon to begin. But remember the antipathy between these two, between one man and the other guy, somnolent. All right, you can Google it. It's got an N-O-L-E-N-T. All right, CrowdStrike IPO'd a week ago and immediately posted, you get doubled should you strike while the iron's hot. But could enthusiasm for the newly minted company peter out, given the fact it's one of the most expensive stocks in the entire market? Then, from the casual user to the industry professional, Adobe has been igniting the flame of imagination for decades and has become one of the world's most innovative and largest companies. I'll tell you how it's upending every single shopping paradigm we ever thought imaginable, except for Wix. And it's also the latest unicorn to make the market debut. Should you cut some slack? Could you resist that one on its first day of trading? Direct listing, we'll explain. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.